Glenn, I'll start with you. I mean, we've got 3.5% unemployment. The amount of jobs that we're getting, maybe it's slowing a little bit, but so's the available workforce that where they're trying to pick from. We got some wage gains. Why are we thinking about cutting rates 50 basis points? Why is it so urgent right now? Is the manufacturing recession front and center, and it's skewing our view of the entire economy? What is it?
Well, I think you're putting your finger on the Fed's dilemma. The economy is in a good place in terms of the job market. But remember, the job market is a lagging indicator. The economy should grow about 2% plus in 19, a little less than 2% in 20. And the Fed may well want an insurance policy. Remember, inflation is not yet up to the Fed's goals. So I think it's a close call, but I expect them to cut.
Jason, what's your view? Is it the manufacturing slowdown, whether it's tariff related or whatever's causing it? Is that why we feel so dismal at 3.5% unemployment?
Look, I mostly agree with Glenn. I don't think these data are screaming out that this economy desperately needs a cut. A lot of this slowing is natural and to be expected as an economy, reaches its potential, and its potential growth is slower. Labor growth is slower. I think what's worrying is partly some sectors like manufacturing, but also if you look at the data, some of the softer data based on surveys on sentiment, is weaker than some of the harder data like the jobs numbers. Maybe that softer data is telling us something about the future. Maybe we want to take insurance out against that. The Fed seems to have the 75 basis point adjustment in their heads. If they cut in October, they will have done that 75 basis point adjustment.
Jason and Glenn, I've been thinking a lot about the question Joe asked you, which is it a weakening economy or is it a tight labor market? And I actually come to the conclusion it doesn't matter in the sense that in both instances, the economy will slow. But the policy response would be very different, right? So let me just start with Jason. If it's a tight labor market, the Fed should probably not be cutting. A tight labor market explaining why jobs are weakening, job growth is weakening. The Fed should not be cutting into this scenario. But if it's a weakening economy and we're off the track of aggregate demand where it ought to be, then the Fed cuts rates in that scenario.
Yeah, I agree with you exactly. I mean, you can look at it from the labor market side. You can look at it from the GDP side. I think our potential growth rate is 1.75%. We've been above that because the unemployment rate's been falling. The unemployment rate can't fall forever. When we get to 1.75 growth, I don't think we should be, that upset. We can do structural policies, reforms that raise the growth rate, but not a lot the Fed can do. The reason, though, not too worried about them overheating is wage growth is decent, but not spectacular. Inflation remains below target. So while I think this is mostly a tight labor market, the costs of being wrong right now, cutting rates right now, don't seem to be that high. The upside might be pretty high in terms of helping this economy along even more.
So, Glenn, it's a lagging indicator, and we say that a lot. So we wouldn't know what's coming from the 3.5%. Something could be right in front of us. Repo, something. I don't know. I'm scared. Should we be scared? Is there a 50% chance of recession between now and the end of 2020, Glenn, that we don't see, or some people do see?
I really don't think so. I mean, I agree with what Jason said about the tightness of the labor market, but there is a view within the Fed. Rich Clarida, the vice chairman, has articulated it well, that maybe the natural rate of unemployment is lower than we used to think, which may give the Fed some room to move here. The Fed does need to be more articulate about its long-term inflation objectives and how it's going to get there. But I just don't see the screaming case for a major rate cut, as opposed to some smaller insurance cut. What worries me, and I think is showing up in the sentiment numbers, is the policy uncertainty, which is clearly weighing on business people. Not the Fed's policy uncertainty, but the government's.
And that could be self-fulfilling then. The business. Yes. So if the guys that make the decisions aren't sure about what's happening, they can actually, sort of a self-fulfilling prophecy based on what they decide to do with capital expenditure.
Absolutely.